Hello everyone. In this video, we're going to learn about profit. What? You are least interested about it because you already know that income minus expenses is equal to profit. Wait, we are not going to obviously learn about that. We're going to learn something new. We're going to learn about different types of profit at multiple levels of financial statement and how they are actually important for taking important decisions by different types of stakeholders. So wait and watch and completely watch this full video in order to get very good practical insights. So before starting this video, I'm going to talk about the difference between profit and gain. Now, if profit is the universe, then gain is just a solar system. So, what is gain? Gain means extraordinary income. So, if you talk about lottery income, if you talk about income on sale of fixed assets, whatever income is there that is non-operating in nature, not in the due course of business, not in the normal course of business. So, thus, that income is to be accounted as extraordinary gain. So I hope you have understood about this. Now let us discuss about gross profit, the first profit in the chain of profit, chain of income. So I think you've noticed this fact that you used to earlier draw trading account and then you used to find the gross profit and then net profit. But when you proceeded in your career, in your academics, you started doing accounts of NPO, you started doing accounts of companies. Over there were no sign of gross profit. Why gross profit had completely vanished? The answer is there is no importance of gross profit in the financial statement of company or NPO because all these financial statements are only prepared for public at large, and for them gross profit has no importance. For them the last net profit is important in order to take their decision, whatever decision they want to take. So if you want to know, if you wonder why is it so, then let us understand gross profit first in detail, not in academics point of view but in the practical point of view, and then we're going to learn for whom gross profit is still prevalent and important too. So gross profit is the basic intrinsic level of profit which is very very pure. So this is calculated at product or service level. No other non-operating income or non-operating expenses are considered with regards to calculating gross profit. So gross profit is calculated with the help of formula sales minus cost of goods sold. Sales means number of quantities sold into price, minus cost of goods sold means opening stock minus closing stock, that is a change in stock, plus purchase, minus abnormal loss. So basically this is your cost of goods sold. Now what is important here, that matching concept, which is the most important concept in accounting, is followed. If you remember your childhood, when mathematics there was sums related to profit and loss, you used to do what? You used to just have your sales value minus total expenditure, and you used to just have the math and get profit and loss happily. But you were least bothered about the number of quantities. When you grew in your academic, then you understood that what is the importance of matching concept. So you have to deduct that cost which pertains to the actual quantity of goods sold. So this is your gross profit. So the actual or the best formula would be selling price minus cost price into number of quantities sold. Now in order to find this cost price, then you have to go again to that long formula. So basically you have to understand that matching concept is very important. Why? Because if you see, if we form the NPO accounts where there is an income and expenditure account, there is no product or services sold as an operating business of that NPO, because an NPO has no business at all. It has only receipt and payments If they are accrued, then obviously we adjust, and that's called income and expenditure. And then whatever comes is your profit or loss. So there is no requirement to find product level or service level profit or loss. Now, for whom this gross profit is actually important? Basically, suppose you are a factory owner. At the time, if you want to take the decision regarding whether to continue or halt the production of certain goods or services, taking into the fact or thinking on the fact whether that product or service is actually profitable or not, you take the decision. So in this regard, the gross profit would be very much important. Secondly, if you're an insurance company or you're a business that wants to claim insurance claim, right, after an accident, at the time they will give you compensation. You have taken the policy of loss of profit, okay, to cover the loss of profit. Then they will give you the compensation with regards to the gross profit only. They will not consider any non-operating income. So here also there is an application. Third, if you've done departmental accounts, or if you know about different businesses having departments, multiple departments, let's say cloth manufacturing companies having department of making cloths from yarn, then stitching it, then coloring it, designing it, packing it. So there are multiple departments. Now, when from one department to the other goods are transferred, it is policy of different companies that they always allow, or they always say that you always count some profit in your department and then sell to the other department, so that there is a pressure on the last department to sold the goods at least above the cost they have nominally accounted in the accounts, and so that the overall profit remains high. So there is departmental interest associated with it. So at that time, gross profit is a very important factor to consider. So I hope you understood about all these applications of gross profit. Now moving ahead to the next step, that is, after gross profit, there is EBITDA. If you follow Shark Tank, sometimes the founder of Lenskart, Piyush Bansal, he talks about EBITDA kya hai. EBITDA matlab earning before interest, tax, depreciation and amortization. Now let's understand one by one. Interest and tax, there are fixed obligation. Interest, fixed obligation to the lender. Tax is the fixed obligation to the government or statutory department. And third, depreciation is the charge on fixed asset in order to provide for the decrease in the value of fixed asset that is being used in the business, in order to account the loss of fixed asset gradually due to a flux of time. And amortization is similar, but it is not on fixed asset, it is not on tangible fixed asset, rather on intangible assets like copyright, goodwill, patent. So I hope you have understood the components here. So for whom EBITDA is important? EBITDA is actually important for top level management like CEO, COO. So EBITDA is the earning that actually means what is the income that the business has earned in the normal course of business. Even if the non-operating income or gains are added over here, the CEO, COO wants to see what the company has performed before paying off the fixed obligation, because that will actually showcase the actual or intrinsic performance. कितना मेहनत business ने किया और कितना perform कर पाया, that is the symbol of EBITDA. So that is why it is also considered by potential investors, angel investors, and venture capitalists, so that they can understand the potential of the business. अगर पोटेंशियल अच्छा है देन बिजनेस उतना बाद में कमा सकता है कि आफ्टर पेइंग द फिक्स्ड ऑब्लिगेशंस ऑल्सो इट कैन हैव समथिंग फॉर द शेयर होल्डर्स और इन्वेस्टर्स और द ओनर्स and also for the growth in order to transfer to the reserves. I hope you understood about EBITDA. Next step ahead, let us understand about EBIT. Earning before interest and tax. That means you have charged your depreciation and amortization. Right now you are only left with the income from which you have to pay interest and tax. And this is considered by mainly two parties, government and the lenders. Government sees whether this party, this business has income to pay off the statutory liabilities, because tax is not only that amount that you are required to pay as a percentage of the profit left. Sometimes there are some fixed obligation that you pay as tax, some penalty that you pay. So obviously this is something that you have to consider. And talking about interest, obviously that is the fixed obligation. Fixed obligation for the loans or borrowings you have made, you have done, you have taken. So the banks, the lenders, the financial institutions, they see or they check whether the business has a foreseeable growth or not in the EBIT, so that not only they will have the coverage of the interest or the fixed obligation accruing year after year, but also when the principal amount will be paid, whether the financial would be that strong so that it can pay off, or rather it can redeem whatever money has to be redeemed along with the interest. So this is a very vital stage where so many things have to be considered. After EBIT, there is PBT or EBT, that is profit before tax or earning before tax. That means you have paid the interest also. Now you are left with the income from where you have to pay taxes. So for company 25% of tax, foreign company 40% of tax. So obviously here it is the concerning or alarming factor whether after paying the taxes, the amount that will be left for the business, whether it would be sufficient enough for meeting purposes like providing dividend, then putting it into the business, reinvesting in the business for further growth, or keeping aside for reserve or emergencies, contingencies. So meeting all these necessary purposes are necessary. So for that, checking this PBT is also necessary. Whether that PBT can tackle the burden of tax, and then whether it would be enough for meeting all these priorities. I hope you got it. Then after paying the tax, what is left is PAT, that is profit after tax. Now what is profit after tax? Profit after tax means what is left for the shareholders. This is not the last stage. Why? Because there are two types of shareholders. One is the equity shareholders and preference shareholders. Now preference shareholders, basically they are also acting like lenders. So to them, preference dividend has to be paid. So for paying a preference dividend, first their preference is to be considered before the equity shareholders also, and then the preference dividend is paid from PAT amount. So PAT, this is tracked by whom? Both the equity shareholders and preference shareholders. But preference shareholders will be much more focused so that they can at least get the validation, or they can get the satisfaction that, yeah, whatever my preference dividend is cumulated, I would get. If it is non-cumulative, whatever that have been preferred would be actually payable to me, because amount is left, amount is there, optimum amount is there for paying me. So this is all about PAT. So after paying the preference dividend, what is left is PAFESH, that is profit available for equity shareholder, PAFESH. So PAFESH is the actual amount from where something is kept for the reserve, return earning, and the rest is for the equity shareholders. Either it would be reinvested in the business, or it would be paid as dividend. So this PAFESH is actually tracked by only and only the owners of the actual owners, of the equity shareholders of the company. And also the management thinks whether there is any requirement to give dividend or not. If they think company has the potential to grow, they may not give the dividend, but in the place of that, they will reinvest into the business so that the business can grow. So they take dividend decision with respect to it. So for both shareholders and the management, PAFESH is very important. So I hope you have understood about the whole range of profit, starting from gross profit to the profit available for equity shareholders, PAFESH. So I hope you have liked this video. If you have liked, don't forget to press the thumbs up button, and don't forget to subscribe Soumya Shanti Guru, because much more new conceptual and interesting video will be coming in our channel. And if you haven't watched my career guidance videos and CA Inter, CA Foundation related videos, go and check the playlist. You would be getting everything regarding CA, regarding college admission. And आज के लिए इतना ही. Goodbye.